let's start with today's topic. Let's talk about Bharat Bond ETFs. What is an ETF? I think that's the first question that a lot of people will ask. So an ETF is a basket of securities that is traded on the exchange and necessarily tracks an index. So it's a basket of securities, means it can be a basket of bonds or it can be a basket of shares. It's traded on the exchange, on the National Stock Exchange or the Bombay Stock Exchange. Just like you have a share price, there is a unit price for this basket of securities. What do you mean by tracks the index? Means it will have the same stocks that are there in the index and try and have it in the same percentage terms. The composition more or less resembles the index. So coming back to now the Bharat Bond ETFs. So you've understood what an ETF is. Obviously this ETF comprises bonds. So there are two series that are getting launched on 14th of July. One is approximately for 5 years, which is the 2025 series, and one is approximately for 11 years, which is the 2031 series. So the 2025 series is going to track an index called the Nifty Bharat Bond ETF 2025. Other 2031 series is going to track the Nifty Bharat Bond ETF 2031 series. So what are going to be the bonds that are going to underlie this index? They are going to be PSU bonds, AAA rated ones. PSU bonds, what is a PSU? It's a public sector undertaking. So by definition, it is either owned by the central government or by the state government or jointly by them. Okay, so that's the definition of PSU. Within that PSU space, they are going to pick up only the AAA rated ones. So that means that the credit quality is going to be extremely high. Now let me give you examples of which are the AAA PSU bonds. Exim Bank, Hudco, PFC, NTPC. So these are the kind of bonds that you can expect that will be there in the index. So will the ETF be a mirror image of the index? Yes. As far as possible, it will be. Now, why do I say as far as possible? Sometimes what happens is that you and I go and subscribe to the ETF, the fund manager gets money, he tries to go out and buy the bonds in the same composition that is listed on the index, but he doesn't manage. Maybe the bonds are not available. Also, ETFs need to keep some bit of money for liquidity requirements in case there's a redemption. Or let's say you and I, we've put in money today and he's not been able to deploy the money today. So that will lie as a cash component. So the next question is, how do you invest in these bonds? Okay. So during the NFO period, the new fund offer period, you have to fill up an application form and submit it to Edelweiss, and it will come to you either in the form of an ETF or a fund of funds. Once the ETF gets listed, then you can buy and sell it on the exchange. Now come to the point of the difference between an ETF and a fund of funds. So for an ETF, because it's traded in the market, you need a demat account. But there are a lot of people who don't have demat accounts. What do you do for them? For them, what they've done is they've come out with a fund of fund structure. What is a fund of fund structure? Think of it like a wrapper around the ETF. Okay. So what they've done is they've launched a fund with the underlying being this ETF. Are there any disadvantages of going through the fund of fund structure? Not really, but if I were to be really picky, then there are a couple of points which don't work to your advantage. A, in the ETF, your cost or the expense ratio, what we call, is 0.0005%. In the fund of fund structure, it is 0.05%. When you're going through the ETF, there is no lock-in. But when you're going through the fund of fund structure, there is a lock-in for 1 month. Not a lock-in, there is an exit load for 1 month of 0.1%. So the next question is, what if during the life of the fund, the PSU gets downgraded and it falls off the index? What happens to the ETF then? So if that happens, firstly, I don't think that is going to happen because, the PSUs they're picking up and for which they want to build liquidity and have the retail investors participate. are strategically important PSUs, so these are not going anywhere. But in case that happens over a 10-year horizon, no one's seen that, then your ETF also gets reset. So if a bond drops off the index, it will drop off your ETF. So with that, I'm going to conclude this one. I've done another video, or I'm going to do another video, in which I've taken up the features of the Bharat Bond ETFs and also broken it down to figure out whether it makes investment sense. So thank you so much and have a nice day.